In our last crypto video, we said that Bitcoin and Ethereum were approaching key support of their prior lows from late April, and that we would probably see a bounce after an undercut of testing these levels. Now today, 2 days later, we're actually seeing that test of the prior lows from late April in both Bitcoin and Ethereum. The white circle shows where we've actually probed just below the prior lows and bounced off it. And the yellow circle actually shows the overhead resistance of the 10, 20, and 50-day moving averages. We mentioned that the 10, 20, and 50-day moving averages would now become overhead resistance that could stop any rally attempt. And we also noted a crossover, a bearish crossover of the 10 and 20-day moving averages crossing below the 50, which is a bearish signal. Now, the interesting thing here is that what we typically see an undercut of a prior low and then a bounce, then a reversal and a bounce into resistance. But you can't tell from the daily chart here, but if we zoom into the shorter term chart, such as the hourly chart, on this hourly chart, you can actually see we got a bounce earlier today before we tested those lows, and then traders sold into strength of that bounce as we neared resistance of the moving averages, and now we're seeing an undercut and test of those lows. And you can see that we sold off in high volume as well, which is typically bearish. Now, the market, because of this, is at a very pivotal point. Going back to the daily chart, you'll see that we now are at a situation where either we're going to reverse and hold these lows, or the undercut's not going to hold and bearish momentum continues lower. So really a inflection point in the market. It's not a good time to be in the market at all, long or short. Cash is king right now, and we just want to give the market some time to settle and make up its mind which way it wants to go here. There's a big tug of war between the bulls and the bears at these pivotal levels, and it looks like the odds do favor in the short term the downside. Looking at the chart of Ethereum, it's a similar pattern to Bitcoin. We also are now testing those prior lows from late April after running into resistance of the 10, 20, and 50-day moving averages, which have all converged overhead right at a single point. And notice how today's high actually aligns right with where resistance of those moving averages is. So just goes to show you that how a prior level of support, 50-day moving average prior acted as support for the past few weeks. Now it's become resistance, and traders are selling into this move every time we see a bounce. Now, in determining the market health and looking for new swing trade setups, there's several things we look for. One is obviously the overall trend of the benchmarks, Bitcoin and Ethereum, as a proxy for the altcoin market. And of course, we just looked at Bitcoin and Ethereum, and they're not looking so good right now. But there's actually two other factors that we look for to determine the market health as well. One is our breakouts following through. Over the past several weeks, we've seen many failed breakouts where crypto tries to break out of a base of support on high volume. In a healthy market, it'll follow through and go further to the upside. But in a weak market, we will see a quick reversal back down, traders selling into strength of the breakout. And that's called a failed breakout. And when we see a lot of failed breakouts, that's not a healthy sign for the market. In fact, it means that you're going to stop out a lot if you're buying breakouts. Here are two such examples of failed breakouts recently. This is a daily chart of STX, which was a former relative strength leader in the prior bull phase. Now, 2 weeks ago, we broke out above the downtrend line in STX, and the price moved above both the 10 and 20-day moving averages right here. Volume increased to about double the average daily volume, and we attempted to break out, but noticed that traders sold into strength and the breakout failed. And we came all the way back down to the lows, but it held up. And then just a few days later, another breakout attempt, right? We rallied. You can see the long wick on the candlestick here, which means the price traded all the way up to the prior highs. But again, the price action stalled and the breakout failed right back down to the lows. This breakout attempt was on even higher volume, as you can see, but it still failed. And when you have failed breakouts, what typically happens is the price action moves much lower. And you can see 2 days later, we've now not only failed the breakout, but we've broken below the lows of the prior range. The reason that happens is because when you have a failed breakout, people who bought the breakout get trapped. And if they don't sell right away, they're now selling into every bounce that the market gets, which also attracts short sellers. So it just kind of implodes on itself. So failed breakouts in general are a bad sign for the market. And another example of a failed breakout recently is an MTL. Last week, MTL in one day rallied about 40% from $1.25 up to an intraday high of about $1.75 on massive volume, as you can see. Now, in a healthy market, that would have been the breakout probably would have carried through to further highs, but instead traders sold into it. And instead of a big volume breakout, we've now got a big volume failed breakout. And just like in the last example I showed you, notice how the price action just continues much lower once you've got these failed breakouts. So as long as we're seeing an abundance of failed breakouts in the market, we're not really interested in going long because the odds are against us. So we said there's three things we look for to determine market health. One is the overall price action and trends of the benchmarks, Bitcoin and Ethereum. Another is we want to see breakouts following through. And the third thing we want to see is an increasing number of altcoins on our relative strength watch list. Now, with the Morpheus crypto service, we maintain a relative strength watch list where we continually look for the top relative strength altcoins versus Ethereum, so that when the market is strong, we instantly know which cryptos to buy. Those with relative strength are typically the ones that continue much higher. In a healthy market, we've got a lot of cryptos on our relative strength watch list. And as market conditions improve, you'll see more and more altcoins joining the relative strength watch list. But when you've got no altcoins on your relative strength watch list, then that's a sign that you really don't want to be in the market because everything's moving lower with the broad market. Now, one good thing about a weak market is that it becomes easier to spot relative strength, because if everything else is getting killed, the one or two cryptos out there that have relative strength will be very easy to spot. For example, if Bitcoin and Ethereum are below their 10, 20, and 50-day moving averages, then any altcoin that's above its 10, 20, and 50-day moving averages could be said to have relative strength. When looking for relative strength, we scan hundreds of charts in the altcoin market, and we look at altcoins that have a minimum market cap of $100 million. We don't want to trade anything less than $100 million because it's too subject to manipulation, such as pump and dumps, because there's not enough liquidity there to prevent that. So we do have a minimum filter. And with that minimum filter, when we look for altcoins of relative strength, now in scanning the charts, we found only three cryptos that are on our relative strength watch list right now, and only barely, I would say. UMA, UMA, is one of the few altcoins still trading above its 10, 20, and 50-day moving averages. Notice that it broke out last week on big volume. But the day-to-day price action, look at those big green candle, big red candle, big green candle, very volatile from one day to the next, which is not surprising given the market conditions. However, it is trading above, still holding above its 10, 20, and 50-day moving averages. So we want to keep an eye on UMA. It could become the next leader when the bulls return. Next, let's take a look at EDU. EDU is a recent ICO, which means that it doesn't have a lot of price history. That's why you see only a few weeks of price history here. However, notice that although it's been trending lower, as soon as we got a bounce in the market today, this actually ended up being one of the top gainers in the market. And 2 days ago in the chat room, we said EDU has relative strength, and this ended up being a leader today as soon as we got a bounce in the market. So EDU definitely is on our watch list for relative strength plays. One of the reasons we like this play, aside from the relative strength, is that ICOs tend to have less overhead supply. There's not many people that are trapped at higher prices, so it doesn't take a lot of buying pressure to move higher when you've got a recent ICO. So we do like recent ICOs. They get kind of preference, especially in this current market conditions. So we've got EDU on our relative strength watch list, and it is holding above its 10-day moving average. There's not enough price history for the 20 and 50-day moving averages. Honorable mention goes to RAD. Now, several weeks ago, RAD was a monster. It rallied all the way from about $1.50 up to a high of $6, about a 400% gain in less than 2 weeks. Quite a monster. However, when the market started to get weak, we had a big sell-off here, reversal, big sell-off, failed breakout above this high, and big volume selling, and it's been trending lower now for the past week. However, the price is still holding above the 50-day moving average, and after undercutting the 20-day moving average, it's now trying to hold above the 20. So it's still below the 10-day moving average, but if we do see any strength in the market, RAD has the potential to rally and take off. Just watch resistance of the 10-day moving average around $3.13. Lastly, another altcoin that is an honorable mention for our relative strength watch list is RNDR. It's holding above its 50-day moving average, just like RAD. but it's now below its 10 and 20. However, it does have the potential to reverse here and started to reverse off this 50-day moving average. It was a relative strength leader now for quite a while, and we want to keep an eye on RNDR if market conditions improve. But of course, we do have resistance now of the 10 and 20-day moving averages right around $2.05. Currently, the Morpheus crypto portfolio is 100% cash. That's definitely the way to be with the market in its current state. But once the market makes up its mind and gets into the next trend, we will be looking to take advantage of the best opportunities out there. But for now, we continue to monitor the market and build our relative strength watch list. Keep in mind EDU, UMA, and those are the two main ones we're looking at, as well as RAD and RNDR are on our watch list. But for now, no action. Keep an eye on those prior lows from April in Bitcoin and Ethereum. Check out our prior video for further analysis on Bitcoin and Ethereum. We'll see you back with our next video on Friday.